US President Trump's big, beautiful tax bill has made headlines for a number of reasons, including its role in the demise of his relationship with Elon Musk. It's made it through the House. It's now making its way through the Senate. And we're interested in one tiny piece of it. It is a very large bill, but Section 899 deserves some attention. Here to give it to us is Mohammed Dirani. He's the Middle East Financial Services Tax and Legal Services Leader at PwC Middle East. Mohammed, it's lovely to see you. Good morning.
Good morning. Thank you for having me.
So, in 600 pages of tax and spending, what is in Section 899?
So, in short, Section 899 is the U.S.'s measure as a retaliatory measure to countries that imposed what they call as discriminatory taxes. And these include taxes under Pillar 2, such as the under tax profit rule, the digital services taxes. And that the measure includes increasing taxes to companies or investors from those countries.
So, and it's being described as a revenge tax. Who globally, country-wise, could or does it target?
Currently, it targets the EU, it targets Australia and Canada, and the US government or the Treasury actually has a bit wide spectrum to include others as well.
Right. So what could it mean for us? What could it mean? Because it's not on countries, it's on companies from those countries and potentially individuals, isn't it?
Exactly. What it means today for the UAE or the wider GCC, it's not a direct impact, it's an indirect impact. So we're currently not in the list of those discriminatory countries. We're not considered an unfair foreign country. But it does impact GCC UAE investors into the US because they invest through structures in those discriminatory countries. So we could be indirectly impacted. Okay.
Give me an example. What could we mean?
An example is a UAE investor investing into a fund, an investment holding platform that is sitting in Europe. And that fund or investment holding platform is holding assets or investments in the US. That platform gets impacted. So the UAE investor loses part of the return, kind of indirectly, not from their own fault, if you want.
And what kind of rate of tax is attached to this?
It starts at 5% and goes to 20% on any remittances outside the US. For US companies that are owned by countries or discriminatory countries, the tax is done through the BEAT system, which is the US's kind of alternative minimum tax, where it increases from 10 to 13%, and the net is much wider.
What could it mean for sovereign wealth funds, which are obviously investing in entities that will be investing in entities?
So what I described earlier is exactly what sovereign wealth funds are going to be impacted with, because we have the sovereigns in the region are very active in the US market. And they do invest in a lot of those structures that are currently in quote-unquote discriminatory countries. Their returns could be impacted, and they will need to rethink of their structures, potentially opening up an opportunity for those funds and those asset managers to start thinking about alternative countries, UAE may be one of them, to route investments in the US.
Could it discourage investment in the US?
It could. Time will tell, but it could, because it's essentially increasing the tax. It's eating into returns. So investors will need to rethink, does the return now hit the mark that we want it to hit? And if it doesn't, people may rethink about investing into the US. But it also opens up the opportunity into how do we invest in the US? Is there a better way than the traditional ways that investors and asset managers have been using?
I mean, you're calling it up an opportunity, but presumably this also comes at a cost for those funds in terms of admin, compliance, restructuring.
Definitely. The cost, the initial cost of seeing what it means for their structures, because a lot of those asset managers, especially the larger ones, have hundreds of platforms and entities. The cost of understanding what the impact is and how do we manage it will be substantial. The added complexity or admin is around information sharing. You now need to look through foreign companies to see what the ownership structure is, and is it majority from discriminatory countries or not.
Could we see a lot of US assets up for sale, fire sale as a result?
Time will tell. Senate is still pushing back. There's pushback on the 899 section. There's a call for carving out investments and investment funds. There's a pushback on the starting date of the bill. So let's see what will pass through the Senate, hopefully before July 4th, or at least that's what President Trump is asking for. And we'll see. But yeah, that's definitely a potential impact.
As I mentioned, it's being called a revenge tax. And I mean, you've listed the countries and jurisdictions that at the moment would be affected under it. Is it, though, in the way that it's written, a lever that can be pulled or pushed in whatever direction if a country or an organisation or even an individual falls out of favour?
Based on what we've seen in the bill, potentially yes, because the Treasury has a wide net into describing or defining what is discriminatory and adding a country. The list of countries will be revised quarterly. So yeah, the Treasury does have the power to add countries to the list, which means impacting investors from those countries. So it could be, but again, there's also the impact, and I'm sure the U.S. Treasury will need to measure the impact on what that means, and the lobbying that is already happening. So that is a power currently sitting with the Treasury. Whether they're going to exercise that power and how widely they will do that time will tell, I guess.
Are the real winners the accountants and the advisors, Mohammed?
We're definitely going to be busy.
Thank you so much for joining us this morning, talking us through the revenge tax, as it's being known, Section 899 of the big, beautiful tax bill that is making its way through the Senate at the moment. Mohammed Dirani is the Middle East Finance Services Tax and Legal Services Leader at PwC Middle East. Thank you for your time.
Thank you very much. Thank you.